Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because even with all of the fear and uncertainty we've dealt with over the past few weeks, the Bitcoin bull market is still intact. Bitcoin is still holding above our bull market support, which is the 50-week moving average, like it did in August 2024 and September of 2023. And Bitcoin has been able to hold that support even with the extreme fear we've seen over the past few weeks, similar to the fear that we saw in August of 2024 and September of 2023. And it's not surprising that the market has been so fearful. You have reputable people like the CryptoQuant CEO calling for the Bitcoin bull cycle to be over. You have talks of death crosses left and right and how Bitcoin is going to be heading lower. You have investors getting absolutely destroyed on leverage trades with the recent $12 billion drop we've seen in open interest for Bitcoin. And of course, we can't ignore all of the macro concerns with fund managers dumping US stocks at a record pace. And we see that in the S&P 500's price action dragging down Bitcoin over the past few weeks. And whenever we see that type of volatility in the S&P 500, it tends to be pretty bad for Bitcoin as well, because investors sell risk assets indiscriminately when there's fear and panic. We can also see that fear very clearly in the ETF inflow data for Bitcoin. We saw a lot of outflows over the past few weeks as the S&P 500 was selling off and pulling Bitcoin down with it. But now that they've both seen a small bounce, we're seeing some of those inflows trickle back in. So taking all of this into account, it's actually very impressive that Bitcoin has still held that 50-week moving average and we're still maintaining our macro higher high and higher low structure, even with all of the panic we've seen with the macro uncertainty. And I'm still sticking to my base case that Bitcoin will not trade below 70,000 and it will continue to hold this possible region, which means the majority of the downside price action is behind us and we've already seen price capitulation. And what we're facing now is time capitulation, which is what I wrote about in Monday's free weekly report that I always link in the video description. For many investors, it's actually easy to hold through these quick drops and price capitulation, but it's the slow and boring chop and consolidation periods where many investors end up losing a ton of money trading leverage or just selling their position out of boredom, expecting price to go lower. But even with all of that short-term uncertainty and downward price action, there's still so much to be optimistic about going forward. For one, Bitcoin beat all global assets ever since the November election. You can see it very clearly in this chart here. Right at the top, we have Bitcoin with a 19% return since November 5th, outperforming gold, outperforming technology, bonds, large caps, small caps. Bitcoin has been the best performing asset, and I'm sure many investors are taking note, especially because we're approaching what is historically a very good period for Bitcoin in terms of seasonality, which is the late March to mid-May timeframe. Here we have the Bitcoin median yearly price path, and as you can see in the blue, at about late March to mid-May over the past 10 years, that has been a very solid performance period for Bitcoin, and we're getting very close to that moment. And if we approach Bitcoin seasonality by looking at the days since cycle bottom and look at the previous two cycles, we can see that this time period, about 820 days since the cycle low, are when we saw incredible price action in the 2015 to 2017 bull market. And we also saw some decent price action in the 2019 to 2021 bull market during that time period as well. So the fact that we're holding above major support, sentiment is quite fearful, and we're still maintaining our macro higher high and higher low bull market structure. It's very hard for me to not be optimistic going forward. We've also seen a shift in Bitcoin long-term holder behavior. We know they have a huge impact on Bitcoin's price. And if we look at the realized cap here based on how long they held that Bitcoin, we saw them aggressively take profits into the March 2024 high. But then once price consolidated for a while, we saw that selling subside, which eventually led to Bitcoin's next rally. They also sold aggressively into that rally as well, which is something we talked about when we took profits above 100K. And now that profit taking from long-term holders has slowed down once again, which makes me quite optimistic on price going forward. And you can see that even clearer on this chart here. In black, we have Bitcoin's price. In orange, we have long-term holder supply. You can see that aggressive distribution highlighted in red as we rallied into that March 2024 peak. Then we re-entered accumulation in green as Bitcoin was consolidating and long-term holder supply was increasing. We saw aggressive distribution once again as Bitcoin rallied into its December high, and now we're seeing accumulation once again by these long-term holders. So for me, it's very easy to be optimistic on the rest of 2025, whether we're going to get an immediate blow off top move into June because Bitcoin just reclaims 90K immediately here, causing everybody to FOMO into this market and chase Bitcoin's price higher, or if this reaccumulation period takes a little bit more time and we have a prolonged reaccumulation like what we saw in March 2024, and maybe that gives us a longer rally into late 2025. But as long as we're above that 50-week moving average, I have a hard time believing that the cycle is over and that Bitcoin is going to go a lot lower in the short term. We still have so many bullish narratives on our side. We're expecting the US stablecoin bill to likely happen within the next 2 months. And as many of you know, I think stablecoins are a huge deal for this industry. We've watched stablecoin users grow by 53% over the past year, going from 19 million wallets to 30 million. And Tether is the 7th largest US Treasury holder in the world, above both Canada and Taiwan. And we know the US government has a lot of debt to monetize and sell. So these stablecoin issuers buying those treasuries is actually very good for the US government. So I'm not surprised that they're trying to pass this regulation on US stablecoins, because the more US debt buyers, the better. And we still have countries and central banks around the world discussing Bitcoin strategic reserves. And as I always say, this doesn't actually have to happen. Just the fact that it's being discussed and entertained is very bullish for this asset, just like what we're seeing from US states all over the country talking about Bitcoin acts and talking about strategic reserves. This would have been inconceivable even 3 years ago, but now this has become a norm, and I don't think we've seen the end of this narrative quite yet. And of course, we can't talk about Bitcoin optimism without talking about the incredible increase we continue to see in global liquidity. And we all agree that Bitcoin tends to follow global liquidity with a lag. I like to look at the 75-day. I know some people love the 85, the 95, the 105. I don't really care how long the lag is. What's most important to me is that Bitcoin is likely going to follow global liquidity. And because I'm not in an over-leveraged trade or using debt to buy Bitcoin, whether it takes 75 days to play out or 105, it doesn't really matter to me because that's only a 30-day difference. And this trend of increasing global liquidity is likely going to continue because we're also seeing M2 rise at the fastest pace in 30 months. It's incredible that Bitcoin was able to reach 100K without an aggressive increase in M2. But now that we're seeing it come in, I'm having a hard time being bearish on Bitcoin with M2 rising at this fast of a pace. We also had what I believe to be a pretty bullish FOMC yesterday, with the Fed essentially ending QT. I know they reduced it to 5 billion a month, but when you look at where they started, which was 75 billion per month, 5 is essentially a rounding error by comparison. And I believe the only reason they're even doing 5 is because they didn't want to overexcite the market by saying QT was ending. So by reducing it to such a small amount compared to where they were before, they can act like they're still doing QT and not getting the market too excited, but it's also a very small amount that shouldn't have too much of an impact on markets and liquidity. And although their projections only said 2 rate cuts for 2025, the market does not believe them and still believes we're going to be getting at least 3, because the market believes the economy and labor market are going to weaken a lot faster than the Fed is currently anticipating, which will end up leading to more rate cuts than the 2 rate cuts that the Fed is projecting as of right now. And as the market prices in more of these rate cuts, that will continue to lower the US dollar index. Now, bounces along the way are normal, but as long as the US dollar index stays in a downtrend, that should be very good for global liquidity and bullish for risk assets like Bitcoin and the S&P 500 as a result. I expect this uptrend in global liquidity to continue, and eventually I think it's only a matter of time until Bitcoin follows as well. And we'll keep an eye on inflation data on the labor market and on traditional markets to try and gauge whether the market will be pricing in more rate cuts or less, and whether we're going to be seeing more global liquidity and a continued uptrend or a reversal. And because of that increasing global liquidity backdrop, I'm still quite comfortable with my existing positions and didn't make any changes to my positions this week. Still have a pretty decent cash position, still have plenty of upside exposure. And if you want a more in-depth explanation of how I manage my portfolio and my portfolio system, the early bird pricing is still available for the Crypto and Macro Enjoyers program that I always have in the video description. But as of right now, Bitcoin is still trading in what I believe to be its fair value range when we look at its extension from its 200-week moving average. If we make it back into the expensive region, we can talk about taking some small profits. If we make it back into the very expensive region, we can talk about aggressive profit taking. And if we make it into the cheap region, we can talk about dip buying. And if we make it into the very cheap region, we can talk about aggressive dip buying. But as of right now, this fair value region is kind of no man's land for me because I already have exposure that I'm happy with, and I'm not really interested in buying or selling Bitcoin at these prices. But it is incredible how much Bitcoin has been dominating this cycle and the increase we've seen in Bitcoin dominance ever since the beginning of 2023. Ethereum and Solana, as well as other altcoins, have really struggled over the past few months. Bitcoin is still positive by 40% over the past year, but Solana is negative 30%, and Ethereum, which should be a safer asset than Solana, is down 40%. Now, Ethereum is trying to reclaim the 2K psychological level here, and the main resistance level I'm going to be watching if we do reclaim it is the 2500 level, where we have our 100-week and 200-week moving averages. Ethereum Bitcoin is also trying to hold the lows that we set in January 2025, and these lows go all the way back to December of 2020. So we really don't want to see Ethereum lose this level. And speaking of not wanting to lose a level, we also have Solana sitting at macro support as well, a support level that has held Solana going all the way back to April of 2024. We've held above this 122 level for over a year now, and we really don't want to see it lost. So at the very least, I would expect a bounce for Solana here, and the real test will be whether or not we're able to reclaim our 50 and 20-week moving averages. But as of right now, it does look like we're overdue for a bounce after the capitulation we've seen over the past few weeks. We also have the Solana versus Bitcoin pair close to our December 2023 lows as well, and that has been previous support. So this looks like it's ready for a bounce also, but a lot of that is going to depend on Bitcoin. As I've said many times, reclaim 90K and the party is back on, and altcoins likely do well. Lose 70,000 and we have a lot more pain ahead, and it's likely going to take a lot longer than we anticipated for Bitcoin to consolidate, reaccumulate, and recover before its next rally higher. But in the long term, I remain bullish on Bitcoin and other risk assets because the federal government is still running these huge deficits, and that trend does not seem to be improving. And if you have exponential debt growth, that debt has to get monetized eventually, which results in an increase in the money supply and currency debasement. And that has correlated quite well with the risk asset prices over the past few decades. So as long as we're seeing this exponential increase in debt and money supply, I remain bullish on risk assets like the S&P 500 and bullish on fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.